Why are Americans so rich when, if you will, the real economy looks a bit lackluster? Then you realize, well, actually, the wealth that is reported is not real in the sense of having a counterpart in the real world. It is hyperreal.
Welcome to another Breakout with Breaking Views brought to you by PGIM. I'm here with Edward Chancellor to discuss hyperreality in the financial markets. Eddie, you wrote a piece this week which looked at the just how incredibly rich Americans have become, but you make the point that they're maybe not as rich as they think they are. Elaborate.
At the end of last year, the Fed published data for household U.S. household wealth at the end of last year. They calculated $130 trillion, up 10% on the year. And that seems a bit strange since you've had a global pandemic, lockdowns, and it comes after a period of low savings in the US and low investment.
You make the analogy to the steak that Cypher, the villain in the Matrix sci-fi series of movies, is eating. It's not actually real.
In the Matrix, you have a real world of decay and an artificial world that has appearance, but nothing is actually there. And the villain, he says that the steak smells good and tastes juicy, but it's an illusion. And I think many forms of wealth today are illusory.
And so we're not talking about steak and the Matrix. We're talking about financial assets and other assets. Let's go through some of the ones that you think are good examples of the hyper-real wealth that we're going through at the moment.
I would start with the cryptocurrencies. I mean, you saw last week the Shiba Inu coin, which is a joke on a Dogecoin, and the founder of Ethereum gave $1 billion worth of Shiba Inu coin away. You're thinking, what is he really giving away? He's giving away absolutely nothing. And then you think of the non-fungible tokens. Remember, Elon Musk was offered $1 million for a non-fungible token, and he turned it down. He was turned down $1 million for nothing. Well, you could say that if dollars are just hyper real, he was turning down a trade of nothing for nothing. But then if you go further back, I think conceptual art. I mean, the Jeff Koons's Balloon Dog, or the British artist Banksy with his self-shredding portrait at Sotheby's, and then shredded itself. Then look at more conventional financial assets. I mean, as you probably know, many pension assets are unfunded. The Fed actually includes unfunded pension in household net worth. You think of the stock market. A lot of companies now have all their assets are, so to speak, intangible. Many companies, large companies, have negative equity. Their profits are sort of hyperreal because they, as you know, that they're made with financial engineering, and the same holds true of private equity as well. All the leveraged fortunes are in their nature somewhat fake.
Okay, so what's one to do here? I mean, you point out in the column that some major companies, I think Lockheed Martin is one of them, others have negative equity. You point out that goodwill is rife on all the balance sheets of these major S&P 500 companies, in greater in many ways than other more tangible assets. What's an investor to do if you believe this case?
What I'm saying is that the system is underpinned by the central banks printing a huge amount of money. If the central banks print money and buy assets, the prices that they set in the market are hyper-real, so to speak. Now, the more they print money, if they print it ad infinitum, you get hyperinflation. Now, let's say they're not going that far, but what they are doing is threatening to destroy the credibility of the financial matrix. And when that happens, I don't think people are going to be paying huge amounts for conceptual art, and possibly not for the dodgier crypto coins. And I think the stock market, which trades twice its replacement cost, will be marked down. And think about bonds. I mean, long-dated nominal bonds will be blown out of the water. So then investors really have to chase, they have to get real. Having lived in an unreal world, they have to actually start buying real assets with permanent values and something tangible. They have to sort of move from electrons to neutrons, so to speak. And there are things, I think they're already doing it. The fact that the commodities have been soaring this year, the fact that US house prices, real assets have been rising, shows that there is momentum already behind that trade. There's one other point I'd make. In this hyper-real world, of investment world we've been living in, a lot of the investment has been automated by bots, like the little robots that went around in the Matrix, with the passive investment, so forth. Now, I think when this when the hyper real world dissolves, we're going to have to go back to flesh and blood investors. In other words, good old fashioned investors who can distinguish between what is real and what is unreal. So that actually creates a lot of opportunity for the so-called fundamental investors who've been under the cosh in recent years.
So active investment managers rather than passive, algorithmic, and that kind of thing. Well, that's interesting. Well, thank you, Eddie, once again. We'll be back with another Breakout from Breaking Views, brought to you by PGIM soon.